Mortgage rates have just hit their lowest point since 2022. That means that buyers can now afford more homes for less money, and sellers should start seeing more home offers roll in. I'm Roland Thomas II, real estate professional here in Southeast Texas. And if you've been waiting for the right moment to make a move, this could be it. So here's what's driving this shift. This month, September 2025, the Federal Reserve lowered its benchmark rate, and as a result, the 30-year fixed mortgage rates have dropped from 6.3 have dropped to a 6.3, 6.13, 6.25. And so these rate and the Federal Reserve said that they could see these rates potentially even go up to 5. And so as the economy stabilizes. We're going to break this down and what that means for both buyers and sellers right now. So, let's get into it. Grab grab that article here. So we'll start with this one here. Share my screen. I'm a screen share person. I like to show you what I am looking at. So this is the one. Yeah, here we go. We'll jump into what some of these economists are saying. Okay. So mortgage rates fall again. Refinances jump to a high to the highest level since 2022. So the average benchmark 30-year fixed mortgage rate fall to 6.26, says Freddie Mac. So since this happened, again, there's been a huge rise in refinancing. So if you have a what does that mean for you? If you have a high mortgage rate, uh put in a refinance and see what happens. I mean, so we're seeing across the board refinancing happen, and that might be a good clue for you if it's time for you to do a refinance. See what you can get. So you can get some money saved up. Maybe it's the gap is big enough that it actually makes a big difference, right? Uh um when you start saving, two, three, $400 a month, then that makes a difference, right? It makes it worth it to try to go through that process again. So mortgage rates fell again this week. Mortgage buyer Freddie Mac said Thursday. Freddie Mac's latest primary mortgage market survey released Thursday showed the average rate of the benchmark 30-year fixed mortgage rate fell to 6.26 from last week's reading of 6.35. The average rate on a 30-year loan was 6.09 a year ago. Okay. So as this getting closer, people are refinancing, right? So mortgage rates decrease yet again this week, prompting many home buyers to refinance. Sam Qatar, Freddie Mac's chief economist. In fact, the share of mortgage applications that were refinanced nearly reached 60%, high since January 2022. So on average, 15-year fixed mortgage fell to 5.41 from last week's reading of 5.5. 1 year ago, the rate on the 15-year mortgage average 5.15. So the latest data from Freddie Mac comes a day after the Federal Reserve lowered its benchmark rate 25 basis points. And I'm gonna get into a little bit of that later on in this broadcast today. So again, mortgage rates are dropping as the Fed chair uh, cut prices, cut the big rate. That's trickling down throughout the market. And so, what is truly though? Okay, you mean that's nice. I'm glad it's coming down. What does that mean for me right now, right? So, if you are considering purchasing a home, the money is getting cheaper. Okay, um, and that means people have been putting deals in. That means that builders are going to be able to finance their projects and their materials a little bit cheaper now, right? So we're definitely hoping to see a lot of that trickle down to you as a buyer, right? And I'm I'm talking on the buyer side right now, and then I'm gonna get into the seller side here shortly. Okay. Get to my notes here. So Lauren Barkhouse are bringing more buyers into the market. Active home listings um, have surged in Southeast Texas. So shoppers have more choices, and from new builds to pre-owned deals. I mean, so we're seeing a lot of that happening here in Southeast Texas. That was that was that where I wanted to go. Okay, all right, here we go. And so then from a seller's perspective, right? Um, we're you're going to start seeing some renewed buy urgency, right? That's going to lead to more offers, faster deals, especially for homes that have been, that are staged and priced at a fair market value. I know we've seen the record number of price changes to listings, right? And so at least you know the greater Houston area. I'm gonna say it like that, because we still have some pretty decent balanced markets in Southeast Texas. So if you're looking over there in Nederland or Port Neches, that area is still we see is still fairly stabilized. Lumberton as well, but Beaumont is a little bit more in a it's still a little bit more in a buyer's market. It's coming down just a little bit to getting closer to being balanced, but still very much a buyer's market in Beaumont. So let's see here. All right, let's take a look at another article. This out the way. Man, all my screen's gone. That's terrible. I don't know where my screen's at. That is terrible. All right, here we go. That's what I was looking for. I don't know why I did that. Let's take a look at this article. Share my screen. All right. So this is by bankrate.com. National mortgage rates were mostly lower compared to last week, according to the bank rate data. Average rates for 30-year fixed and 15-year fixed and a 5/1 ARM receded. So mortgage rates have been trending down in the past several weeks amid growing odds of Federal Reserve cut. And I think that's also something to keep in mind too. I don't think many really grasp that from the marketing side of this, right? We start seeing really anything with the market adjust as really emotional, right? So as we were anticipating the Feds to reduce the rate, banks were already starting to try to get ahead of it, right? If whoever could cut it first, they're trying to get feet in the door, right? To get those loans out. Um, I think it's very interesting. It's really emotional. You know what I'm saying? Like it really is. And I think it's always something really interesting to me. There's an element of science and economics, and then that's a lot of emotion, man. It's so I always try to stay pretty level headed, man. And you have to because it's wild out there. Mortgage rates have been trending down in the past several weeks and been growing. Like I said, amid growing Federal Reserve cut, they dropped again following the markedly weaker August job report released September 5th. It remained lower last week as the latest inflation reading came in at 2.9% above the Fed's 2% target. And as bonds traders are betting on 100% chance of a rate cut, mortgage rates have not looked this good in the past 12 months, said Dennis McCanus, a global real estate advisor for England Volkers. This is the boom that we needed in the in the industry. It's important to remember, however, that the 30-year mortgage rates aren't directly tied to the Fed benchmark rate, says Stephen Cates, CFP, chief financial analyst. A financial analyst at Bank Rate. Mortgage rates are primarily influenced by 10-year Treasury yield, which had been declining since January, says Cates. Man, listen, they can say what they want. Here's where I'm coming in, y'all. I ain't playing, man. They can say if they want. It's not tied. It's not tied to this. It's tied to that by the numbers, right? But I'm telling you, this stuff is emotional. Stock market is emotional. It is all emotional. And they can say it's not political, it's not geopolitical. It is. It is. They can say what they want. All the data says this. If you mess with any kind of spreadsheets, if you can there's a saying in the um information industry, and it's this: information analyst, data analyst industry. If you beat the numbers long enough, they'll confess to anything. And I'm for real. Like, I've seen presidents come and go in my lifetime. There's plenty who've seen a lot more, but I've seen a couple myself, right? And everyone, you're gonna have people that, oh, our the job market is great, job market's bad, job market's great, job market's bad. If you beat the numbers long enough, they'll confess to whatever they want. I don't believe none of them when they say, "Oh, we've improved the job market. Oh, the job market's great." Do you know people that got jobs? You know people who don't got jobs. Is everybody around you getting fired, or is everyone getting hired? I think locality really helps you kind of have a level mindset with this. But they're gonna play their games, right? And so you as a consumer, you and I as consumers, we just gotta play the game as well and realize when it's the best time to buy, and then when it's time to sell. If you feel like you're in the season of selling your home, you gotta expect some stuff, right? If you have the opportunity to hold out a little bit, you might want to hold out, right? If you don't have the opportunity to hold out, then determine if selling this home is going to make you some money at this point. If it's not, you might be better off holding it and renting it, right? And create some cash flow. And so, um, y- just that's what I would say. And that's what I'm saying, right? All right, let me see. Let's take a look at another one. Actually, no, I had another article that I want. Come on, man, this is moving. I don't know why this is moving really slow now. It's moving fine earlier. Okay. So let me bring this thought in. So for sellers, like I said, you should start. I'm probably going to start seeing some buy urgency come up, right? You can start seeing it trend up, tick up a little bit, right? And so if you've been where you want to see what kind of traction you have on your listing is, are people coming to look at it? Or are you getting some foot traffic, right? That's how you're gonna know if your property is priced right. Because truly, honestly, at the end of the day, the market, what determines if someone's going to buy your home, right? Is how much they're willing to spend for it, right? And that's just the hard truth, right? That's going to determine if your house is going to sell or not. Whoever is willing to buy it at the price that they can afford, and that's price to value. Like, that's who determines, and that's actually what creates the marketplace in that area. And so, um you might you I don't know if I don't think this is going to get back to pandemic times, because that was actually unique, so unfortunately, if you bought your home in 2020, um it might have been inflated. It was probably inflated. So the true market value of your home is really starting to come out at this point, right? And that is how much that is, can people afford the home at the price that you have it at, based upon how much they can get access to that money. And so if you could wait, I mean, now traditionally it's going to slowly trend up, because nothing ever truly ever really gets cheaper. But that does come a time when it inflates and the market has to correct itself, right? And that's honestly what's going on. We're seeing a correction from 2020. And so that might mean you might not make as much. You might break even. And for some people, you might lose some money. And it sucks. Um, but it is what it is, right? And so, um, for sellers, this is you might be able to hang on just a little bit, and you might be able to get you might be closer to the price that you actually want. I think I think you're gonna start seeing that trend a little bit here. I think we're gonna etch to a more balanced market for sure. Now, again, let's say if you're in Southeast Texas, there's some areas that are hot, and they've been hot the whole time because we just got a lot of stuff going on in Southeast Texas. We got plants getting built all over the place. People are moving here, short-term rentals, long-term stays. People are calling this place home, and it is what it is, right? And so we are unique in that standpoint. Um, and so, if you're a seller, you might be able to stay in that seller's market and be able to try to be able to get some of that price. I mean, we're not seeing just a huge dip in the asking price to what people are willing to buy around here. So that's good. That's good for the sellers. And so for a buyer, that means you got to be ready, right? You need you want to have your pre-approvals together. You want to put together a competitive offer. You know, now depending on how long the list has been, how long the listing has been there, there's some strategies that we have to help you try to get that home at the best price for you. So options there, options there. My computer is not helping me today, so got to go the rest of my notes here. All right, stay on track, Roland. Stay on track. Okay. so what? So let's go to some again. So Federal Reserve Chair Jerome Powell did the rate cut. Now, the conservatives, Republican conservative side of this were shooting for a 0.5% cut because the economy has stalemated, right? I mean, there's not a lot going on, um, and they're looking for the numbers that and seeing that Powell is saying that he's looking for the numbers and seeing that we're hitting a shift in the economy, right? And so this 0.25% was a risk management cut. That's kind of how they're stating it. And so this is signaling a pivotal shift for the nation and local housing economy, right? So Powell emphasized this move was intended to guard against growing uncertainty given the cooling job growth and moderating inflation, not a reaction to crisis. So he's saying that so he was saying, and this was from USA Today. He's saying this that this was a preventative measure because we're seeing a slight um, dip in job growth. They're just playing games, y'all. Let me cut to it. I'll just cut to the chase. They playing games. I wouldn't, they always playing games. He described the policy as moving towards a neutral stance, balancing economic growth and inflation. Powell acknowledged monetary policy alone couldn't solve deep issues like regulatory costs and housing shortages, but should offer some relief on the financing side for home buyers and builders. The Fed projections include two more cuts this year, which could further lower rates and stimulate borrowing. However, the future moves will depend on evolving job market and inflation trends. So depending on what the job market's gonna look like, depending on what the inflation trends look like, we could see two more cuts potentially by December. So if you are, if you're thinking about selling your home later, it might be a good move. If you're thinking about buying later, might be a good move. Um, you just never know. What happens is when you figure that you're ready, right? That they're going to give you an anticipated rate, right? This is a pre-qualification rate, and then as you get closer to being approved, then we get closer to that final rate, and then that final rate is established, really before before the loan is cut, and so you can if you start, there's nothing wrong with starting to look into the process. Now, here's what if you're ready to buy a home, just buy it. Right? You can always refinance. And that's what we're seeing now. We're seeing refinancing skyrocket. If you have the opportunity to wait out a little bit, you might wait out. If you're ready to sell your home, again, I don't think we're gonna get back to 2020 just bonkers crazy bids coming in all over the place. Um, but you might be able to, we're gonna really have to you're gonna really need your house price competitively and looking good. It's gonna have to stand out in the market because the competition is up. I mean, the listings are high all across. The listings are up in Beaumont and Southeast Texas. Listings up in Houston. There are a lot of listings out there, so you need to make sure that your real estate professional is helping you have your home really really stand out. So put that note on there. All right. Let's say we're in economic uncertainty. All right. Okay. So let me get to some of the good stuff. I think I just really hate my computer the way I would like it to. So my notes are all over the place, and it's not helping me. But it's okay. We gonna keep on going. All right. So yeah, so we got two sides to this coin, right? Um, in response to the federal rate cut, I just want to highlight that for a second. Okay. Then we'll bring it all home. So liberals and conservatives are framing. I'm gonna just share both sides of the aisle here of what we're seeing. So from this most recent rate cut as of Tuesday, was it Tuesday? Wednesday, uh, Tuesday, Wednesday. I was driving somewhere. I just remember that. Okay, so September 20. So yeah, okay. So the rate cut distinct. Oh, so here's what both sides are saying. Here's both. So the liberals said many Democrats and progressive commentators broadly support the rate cut as a necessary step to address the unemployment and bolster access to affordable housing. Okay. The emphasis on the dual mandate, liberals are really stressing. Liberals stress keeping unemployment rate low and argue that recent job market weakness makes lowering rate the best move for working families and home buyers, even if inflation remains above the Fed's 2% target. Housing advocates and Democratic Party policy voices point to underlying supply side challenges, calling for the rate to be cut for the rate cut to be paired with expanded federal investment in affordable housing, efforts to cut red tape and initiatives to protect vulnerable buyers and renters. The rate cut is seen as a partial fix rather than a solution. Some disappointment exists that the rate cut wasn't more aggressive towards a 50 basis point move, which progressive lawmakers say could could have delivered a greater affordability boost for homeowners and home buyers and renters. So from the conservative side, many conservatives, including Senior Trump administration officials criticized the Fed for being slow and timid, arguing that Powell should have cut more aggressively, at least 50 basis points. So they're both saying the same thing, 50 basis points. Okay. Not just 25, not just point 25. Oh, for a risk management type of cut, right? Republicans emphasize that the Fed's delay have froze up the housing market, making the American dream harder to reach for buyers. And they argue that high rates, which they which they say are a result of the Fed mismanagement and regulatory burdens, are damaging home affordability, stalling new construction, hurting trade. Some propose that the administration declare that the for broader deregulation, tax incentives for home builders, and further Fed intervention to unfreeze credit markets and revive demand. Okay. Real estate professionals align with conservative positions like Douglas Elliman agents advocate for deep rate cuts, arguing it would immediately jolt market activity, let buyers qualify for more loans, and support economic growth. So it's interesting, and I'm for real. I'm being real. It's interesting how the feds will say that, oh, this isn't political. But for some reason, people was able to buy homes in 2020, like, and rates were lower. And we come to find out that the government was buying them down, like it's buying down rates. You can say it, they can say it's not political, but it sure seems very, very political. That suddenly now you can't do nothing, to help. At the end of the day, there's always buyers and sellers, right? In order for someone to sell a house, somebody has to buy a house. And in order for someone to buy a house, they gotta be able to they gotta be able to borrow the money at a effective rate. Right. And so if that rate is high to the point where they that a person who qualifies for a loan determines that, man, I'm not trying, I only got X amount of dollars to budget, and I need those X amount of dollars to give me the most amount of money that I can get to buy this home. And if my, if my 2,500 will only get me, a $300,000 house, then I don't want a $300,000 house. But if my 2,500 to give me a $400,000 house, then I'll get a $400,000 house, right? So that's really what it is. If the rates come down, people will people will be able to afford more of what they want. So if I don't want to spend $2,500 a month on a $200,000 house when I can spend $2,500 a month on a $400,000 house. So, man, that's where we're at. And truly, at the end of the day, the rates need to come down. Like, that's it. You know, people need, and so either if the homes can be built at a cheaper cost, that helps because the builders are trying to get the homes built, at a price point that makes sense, right? So they can sell it at a price point that makes sense. Like, that's I don't know. That's just basic. That's basic. It's basic economics. You know what I'm saying? So, um, I want to share that. I want to come on and just share that with you. So, like I said, we saw some big rate cuts. Rates are down. Buyer confidence we should start seeing some buyer confidence ticking up just a little bit. So if you're selling a home, you might be able to start getting the prices that you want, right? And if you're ready to buy a home, you just start getting ready to buy a home, right? If the rate's going to trick down, you're going to be able to get a little bit more for your dollar. And we'll see how far you can get where it makes sense for you, right? So keep your ear to the ground, and we might be moving into a good turnaround for the market here, which I'm really excited for because housing is the American dream, right? People, housing is the American dream, and um and it's just you get a sense of ownership when you own a home and you own the dirt around it, right? And I remember that feeling when we first bought our first home. And so um, it's exciting, right? So, anyways, have a blessed day, and we'll see you on the next video. Peace.